back to the nationally recognized Real Estate Radio Network's Don and Gino Real Estate and Finance Radio Show on your hometown station, AM 1220 KHTS. Make sure to get great information or ask your important questions at donandgino.com. Now, back to your friends, Don and Gino.
And it's not Don and Gino today, it's Don and Steve.
Don and Steve Show.
And you'll recognize that voice. It's
Absolutely.
Steve Korn with New Hall Escrow, owner of New Hall Escrow.
right.
And always a pleasure to have on the show.
Super to be here too, Gino. We got some great information going out there today, don't we?
We really do. You know, it's I've already learned something, and that's part of the goal every show is I know that when I've learned something, I know that our listeners have learned something. And today's no different. We have Scott Zimmerman with Corporate Strategies here, and it's not just corporate strategies. I know that's the name of your company and that you help businesses, but if there's an individual that's listening that needs your help, you help individuals all the time, right, Scott?
Absolutely. It's an old name we've had for 25 years. I can't change it now, but yeah, we help a lot of individuals.
And the corporate strategies part, because it is important, I know we've talked about this before, is you do help corporations with large group insurance and HR situations and things of that nature as well, right?
Yes. Yeah,
Okay.
we're a small group to large group.
Okay,
Yes.
so you kind of cover the gamut when it comes
Everything,
to insurance.
yeah.
So what we were talking about a little while ago was we were discussing healthcare reform, and I think we pretty much covered it. I learned a lot about the whole covered California piece. I had no clue how that operated, so thank you for that. And what we're going to dive into next could be a little more delicate.
It's an area for diversification in Scott's industry, I think.
Yeah.
And certainly we're. How many years you been in business?
This is my 25th year.
All right, so
Yeah.
25 years ago, we wouldn't be talking about these kinds of things.
No.
So the product we're going to talk about now is more or less an evolutionary item.
Yeah.
I mean, I know it's been around for a while.
Yeah, it's been
but-
around probably.
but
Yeah.
it's getting more popular today than ever, right?
Very
wow.
popular.
You guys are going
Very-
to throw something at me if I say this, but it's kind of a boomer item. It's been created by the boomers,
Ooh.
right?
He's looking, yeah, Gino's looking at me and looking at Scott. And I'm looking back at you like, you know what? Yeah, we can take it, buddy. I don't know about that. You're pretty lean right now. I
Yeah,
don't
he is
know.
pretty lean.
Yeah, for sure. We're talking about long-term health care.
We are.
All right,
we are.
so that's,
and,
that's
and-
something that
and-
everybody's heard.
And you know what the bad news is though, even though that it's a new product and it's a new care for insurance, a new thing, hey, I could really use it right now with my grandma, and we didn't have it. So I'd love to talk a little bit about it and long-term health care or long-term care. Is there more names for it? It sounds
Well,
like there's
that's fine.
something that people
Yeah.
call it a lot. Tell us a little bit about who needs it or who may need it, because I know since it's kind of a new product, we may all feel like we don't need it.
Okay. Well, basically, long-term care insurance will cover you if you need assistance in your home or if you need to go into a nursing home. So it does both. You really, if you don't have any assets at all, then you really don't need it because the government will take care of you. You may not go into the facility you want to go into. You won't have the choices of going to a nice facility. You have to go to one of their approved facilities. But if you have any assets at all, not any, if you have if you have assets you want to protect, you want to leave it to your family, your children, or whoever, then long-term care would be a great thing to get. Statistically, 1 out of 2 people will need long-term care insurance, some form in their home or in their nursing home.
1 out of every 2.
1 out of 2.
That
Which one of us is it?
Yeah,
Which
right.
one?
Right.
Which one's
So-
the safe one? Right?
So the argument is,
Yeah.
do you want to build your life, creating wealth that you leave as a legacy to your family, just to be squandered away in the horizon of your life, when you need it at the end of your life, or
if
if something else happens where you're hospitalized and can no longer take care of yourself and you need constant care.
Right.
So in other words, if you live your adult life trying to leave a legacy for your family, long-term care insurance will allow you to protect that while receiving the care that you need.
Right.
Is that right?
Well, the long-term care insurance would help pay for your facility.
Right.
Whatever you needed, it would help pay for it.
Right.
So you wouldn't have to dip into your assets to pay for it yourself.
So I'm going to touch on that real quick because my grandparents would have qualified to go into a state facility because they didn't have any assets. However, upon visiting those facilities, my grandfather absolutely refused to let my grandmother go in there. So, you got to take into consideration what quality of life do you want in those hardest times, because those are the times where you're encountering some difficulty. Maybe you aren't mobile anymore. There's a reason you need assistance, and you want to be at the best place possible. So you want to make sure that you make this investment early on, rather than try to figure out how to do it later, because it might be really expensive in the end. And just to give a really round number, we looked at a couple of places that were nothing fancy, just a normal place, where my grandma would be a little more comfortable than what government issue was. And you're looking at somewhere between $7,000 and $12,000 a month just to get started.
Wow. Yeah.
So
It's
big
expensive.
numbers.
Does your industry have an established factor or number that they use for an average daily healthcare cost?
It goes by state, and
Okay.
it goes also by area. But in Los Angeles, basically, it's roughly $250 a day for an average facility.
Okay.
There's places that are obviously a lot more. There's Marriott's and Four Seasons that have built these facilities that are just really nice, and there's going to be a little, those will be more money. But $250 a day is, it's basically standard in California.
That's the cost.
Los Angeles.
That's the cost of a reasonable place, average.
Average, yes.
So that tells me that if I'm going to be there, hopefully for a longer period of time, that hopefully the quality of life improves while I'm there, and I actually can stay there and be cared for maybe for a couple of years, I'm going to need some bucks. So,
Yes, you could say so.
and if I want to choose that Marriott type of place, I want to be able to choose that place if I'm
Right.
just going to be there for a short amount of time. So how does this work? Because you mentioned now, I'm not choosing a facility today because that facility may not be around. So is this more like life insurance?
A long-term care policy is really, you customize it to what you want. So you pick out your daily benefit today. You pick out your waiting period. So a waiting period is like a deductible. You could say, I'm going to have a 90-day waiting period, which means if you go into care, you're going to cover the first 90 days, or you can have a 30-day waiting period, which means the premiums are higher because your deductible is lower, 30 days. And you also are picking how long you want the benefit period to pay for. 3 years, 5 years, 7 years, 10 years. You could pick how long, in the event I need it, this is how long I want to make sure it stays around for. But, and then there's one more important thing. I always put on these policies an inflation protection rider.
Right.
So it's really important. So the typical compound inflation rider is 5%. So starting in year 2, even though you're not using the plan, it goes up by 5% to keep up with inflation. So if you did $100 today, it'd be $105 tomorrow, next year, and up from there. So when you ever need it, it's going to be worth a lot more than what it is today.
So that's a really, really great point, because you're saying these policies are around without the inflation rider, and you might think you're protected, but that value of your policy is eroding every single day because being a financial show, I could tell you, inflation happens.
Yes.
It just does,
Yeah.
and we need it because without inflation, that means our economy is not growing.
Right.
So I guarantee you that the $100 in your pocket today is not the same as the $100 when I used to be a kid and go to the market with my grandma, and they had to call the manager to look at it. Now you use a $100 bill just to pay for gas.
There you go. And then it cuts you off. We don't want to sell you more than $100.
Right.
If your vehicle needs more than $100, it cuts you off right there. You got to put your card back in there. So how do you price? How are these policies priced? Is it based on the age of the person applying for it at the time they apply for it?
It's based on your age, your health, what your daily benefit you want is, your waiting period, inflation protection, and how long the policy. I may have already said that. How long the policy is paid for, and so that's how. So each person is looked at differently by age. If you have a spouse, most of the companies offer a huge discount if 2 people go on there, 2 spouses go on there. So it's
not quite 2 for the price of 1, though, right?
Not quite 2, but it is a big discount. And statistically, just so you know, people that need care, it's on average 4.5 years in a home. So most people would rather be in their home being taken care of instead of going to one of these facilities. And so that's statistically how long people will need it for in their home. And in a nursing home, it's 2.5 years. So people do go into a nursing home. The average is 2.5 years they'll need it. Some people last with Alzheimer's 10 and 15 and 20 years, and some people only last a month. So it all matters what the situation is, but that's just
on average.
On average.
So you mentioned something that's really important, and we're going to talk about that a little bit when we get back, is we have a pretty short window, but reality is this is great because you can still choose to be taken care of at home. And I think one of our other partners, Miles McNamara, has been able to talk about, aging at home and being able to age with pride or something along those lines.
Dignity. Pride
Yeah.
and dignity.
Yeah. So think that what's nice about this is it can help you cover the cost of having someone come into your home and assist. And we've talked a lot with Miles about that, is sometimes you don't need full-term care. You don't need a facility. You just need someone for those few hours that somebody else that can't be there, or you need someone for the evenings when you got to sleep.
I think another great topic to talk to Scott about would be, at what age do you pull the trigger on a policy like this? You know, at what point do we look at ourselves and say, okay, time to get this? So
Right.
when we get back, we can get into that as well.
Well, sounds good. There's a lot of great stuff with Scott Zimmerman with Corporate Strategies on the Don and Gino Real Estate and Finance Show. And when we get back, we're going to continue talking about long-term care, because sounds like there's a lot more to it than we already know.
All right.